Average duration was 6 minutes for this strategy. So if you are someone that does not like sitting in trades for a very long time, this could be a really good one for you because these trades are super short. So yeah, switching it up a little bit today. I'm going to be out of town next weekend for a wedding, so doing a little Monday stream today for you guys. And yeah, someone actually in the recent YouTube video that I posted, the last video or the one before that, someone mentioned this Joovier's Gems hybrid Superscalp strategy. So I took a look at it, and it's actually, I haven't seen a ton of this guy's videos before, but he's got quite a bit of subscribers. So some of you may have heard of him before as a successful futures trader. I think he's made quite a bit from trading, and this kind of hybrid scalping strategy is his bread and butter, like his main strategy that he trades on different assets. And so I'm gonna really go through his checklist. I went through all the videos, went through a bunch of examples, and so I'm going to try and share with you guys kind of all the rules of his strategy, and then we'll actually do some backtesting of it ourselves. And so really the like I said, the basics is going to be one minute time frame, and he predominantly trades this on the NASDAQ. But I did hear in his video within his community or other people that have done some testing, this same strategy may work on gold, it might work on crude oil, could be natural gas. I think he'd mentioned some people are trading it on too. So it's definitely something you can test with different assets. And then he generally will trade from about 8 to 3. I think he's Central Time, so it's like 7 to 2 his time. It's kind of when he'll trade, but kind of a little bit before New York opens till kind of the afternoon in New York. So that's kind of when he trades. And then he said, I think 9 to 11 is kind of the core hours that he says the strategy generally does best. So if you couldn't do the whole time, but you wanted a couple hours, maybe the 9 to 11 window is kind of best for that. And then you can definitely test it in other sessions as well. Generally, your volume and liquidity is going to be a lot higher during New York session, especially for indices. But if you want to test it on gold, I think that would be something that's going to have pretty consistent volume in a bunch of different sessions. And yeah, you can trade this, test it out on other assets as well. Really on our chart, all we're going to need is the 100 moving average, exponential moving average. And we're going to be using Heikin Ashi candles. So for those of you that haven't seen those before, they basically kind of project out the average kind of price during the candle. So they're a little bit different than your typical like open and close normal candlesticks. But I'll show you guys how to get them on your chart. But we're going to be using those for execution for this. And really, like all he does to kind of identify, which direction are we trading? Are we trading long or short? It's kind of in addition to like looking to trade in line with the 100 EMA, he's also looking at market structure. So kind of the first condition he needs to be able to see if I want to take shorts is we need to be below the 100 EMA. We need to at least have formed one lower high for short. So we come down here, we make at least one pullback, and then after that point, as long as price stays below the 100 EMA, all he's looking for is shorts. On the flip side, if price comes up above the 100 EMA and we get our first higher low, then it does not matter at all what price is doing after that. As long as it stays above the 100 EMA, he's looking only for longs at that point. So a little bit different, but honestly pretty simple. I'll show you guys examples for that. He uses these candles that he calls them clean pullback candles. I've heard them referred more to as like flat top or flat bottom candles, but it's pretty easy to visualize, and I might zoom in a little bit so you can see even better. So when you look at these Heikin Ashi candles, like I said, they look a little different than your normal candles. They help you more easily identify the trend based on kind of more of an average price. And these clean candles that he's referring to, if we're looking for shorts, we're looking for kind of clean green candles before reversal back to the downside. And all it is there's no wicks on the bottom of these candles. So you can see all these candles that I've mentioned in the strategy PDF, there's literally no wick on the bottom of them. And for his entry criteria, we need at least 2 of them. And so as we go through examples, I'll show you guys there's oftentimes even more than 2, but we need to see at least 2 of those, and then vice versa. If we're looking for longs and we are trying to look for those clean candles on a pullback to the downside, same thing. You want no wicks on the top. So if you're looking for longs, you need basically red candles with no wicks on the top, basically like flat top candles. And vice versa, if you're looking for shorts, you need to see at least 2 candles, clean candles with no wicks on the bottom. So you'll see it like this. And as you get more familiar with the Heikin Ashi candles, you'll be able to see these a lot easier. But definitely an important part of his strategy. The next piece of his checklist are these kind of high volume doji candles. He mentions in here high volume doji, and this is definitely the most discretionary part of his strategy, because he doesn't like, when I've learned candlesticks before in the past, like a doji is something more like this, where like the body is almost like non-existent, like it's pretty much all wicks on each side, and it's very, very, very small body. But when he did his examples, even candles like this, where it's simply just like a smaller body, he would like kind of call a doji. And the way he kind of interprets high volume doji, I was expecting him to have like volume bars or something on the chart to be able to see, was this candle higher volume than previous candles. He actually just goes off the size of the candle. So his like interpretation of like a high volume it's basically an indecisive candle, like lots of wicks on both sides, but pretty small body. And it needs to be basically like the same size or larger than the candles, like the last like 1 to 3 candles. And that to him is kind of an indication that we've got some, at least some like, buyers and sellers kind of creating that price action. And he really avoids like small doji candles that are much smaller than the previous candles before. So for the most mechanical definition that I can give you guys, that when I've started backtesting this, like I use this like price range tool to like literally measure the height of the low of these kind of doji candles, and as long as it's within like, I don't know, 1% or sorry 0.01% or something of the kind of candles around it, as we see examples, like as long as it's about the same size as the candles nearby, then it's usually good. And then kind of last thing, I've been including both of these, but he generally will prefer if the doji closes green for longs and closes red for shorts. I've been using different tags within FX Replay to kind of track separate data for those. It's not an absolute requirement, but he does prefer if the candle closes in line with the way he wants to trade. So let's talk about the actual like entry itself. So we've decided, which way we're going to trade based on our 100 EMA. We've got a higher low, and then we see at least 2 of these kind of red pullback candles for long. We've got our high volume doji candle here with nice wicks on both sides, pretty indecisive, and it's actually bigger than both of these candles from the bottom to the top. What you're going to do for the entry is place your position tool on the chart as if you were going to use like a buy stop. So basically, if price came above the top of this candle, if you were to enter there, if you put your stop at the low of the candle, project out a 1-to-1, and you'll just do a market entry whenever that candle closes. And it's always going to be more than a 1-to-1 because, like I said, the Heikin Ashi candles are showing you the average actual price is closing somewhere within this candle. So if it works out, you'll actually get a little bit more. I think I've been getting like 1.4, 1.5 R on average from those. But you literally will just kind of use the position tool as if you were placing a buy stop right here for a 1-to-1. And then if it hits a target, you'll get something like 1.5 R on average. And same thing for a short. We're below the 100 EMA. We've already established we're looking for shorts. We have at least 2 kind of flat bottom candles here, or clean pullback candles. High volume doji that's roughly the same size as the last kind of few candles. So you'll put the position tool on the chart with kind of, assuming you were using a sell stop in this case, and target out kind of a 1-to-1, and it'll just be a market entry at this point. And I'm going to show you guys one more additional rule. If the candle isn't the kind of same color, like in this example right here, we had a green candle close that he prefers, but you can also take trades that the candle closes in the opposite color of your trade. There's just a little nuance to that. So basically, he said he can take trades where the high volume doji closes against your trade direction. So in this example, we were taking a short, it closed green. Can I still take this trade? And basically what he said is if the actual price closes below like the body of this Heikin Ashi candle, then like it's still okay to take, even if the candle is against the direction. He doesn't really care where the price is. If the Heikin Ashi candle closes in line with his trade direction, he'll take those kind of all the time. But if the candle is a different color, then he needs the actual price to close relatively like close to where that 1-to-1 would be. And I'll show you how to visualize this on the chart, because you're going to basically see 2 different price lines on the chart, one where the Heikin Ashi candle is closing and one where the actual price is. And then we're not going to trade during red folder news. We're trading 1 minute time frame, so you're going to get chopped around super quickly if you're trading around that. So trade checklists that you guys can refer to as you're kind of going back to this, but I'm going to show you guys a couple examples that I just showed you. So we've established our higher low above the 100 EMA. So during this entire period, all we're looking for is longs. And then as you can see, we don't have we don't have two flats or clean pullback candles until right here. And I did also want to mention one important rule. He said those high volume dojis have to happen like immediately after the flat pullback candles. And he said, like an example like this, if there's a small doji kind of before you get the larger doji, he'll also pass on those trades. So he really wants to see those clean pullback candles followed by the high volume doji, and that's like what it will give him the highest probability setups. So again, looking at the example, we've got our two clean pullback candles, a high volume doji that's in line with our trade direction. So I can't visualize exactly where price closed, kind of based on the actual candles. It was probably somewhere around here. So you would basically market enter after this high volume doji candle closed, targeting out a 1-to-1 if you were to use a buy stop right here. And you can see really quick way, and this one took 7 minutes or something to play out. And same thing for a short. So we've got our lower high below the 100 EMA. So this entire period, we are looking for shorts. We did have a couple pullbacks, but no, there weren't two flat bottom candles until right here. So you can see right here, we had our two clean pullback candles, followed by a high volume doji candle that's at least relatively the same size as the candles before. We do a market entry after this candle closes, just targeting out a simple 1-to-1, as if we were using a sell stop kind of at the candle low. So I'll show you guys how to record these in FX Replay, but before we dive into the backtesting, can somebody give me a month and a year, like within the last 3 years? I'm going to kind of backtest a random period in time today to just show you guys kind of without cherry picking a particular time. So someone in the chat, let me know kind of a random month and year within the last 3 years, and we'll create a backtesting session during that. So Joovier's gems, 1 minute scalp stream. I always like to use 100K balance. March of 2024 we got from someone. So again, I'm going to be doing this on NQ today, but you could definitely test it on gold or crude oil or different assets as well. Let's see. So March 2024. Sorry, we already got a suggestion, so I'm going to go with the first guy, March 2024, and we'll see what we can get through. It does take a little bit of while to backtest this one because it's obviously quite several hours per day on the 1 minute time frame. But we'll try and get through several examples, and I already did some testing as well, so I have a little bit of data from before as well. So I'll create the session. I'm going to go ahead and I've already created a strategy for this, so I'm going to put the strategy in here so we can look at all the data together when we're done. And then we'll get into the session. I'll show you guys kind of how I have my chart set up. So I'm going to make a copy of this layout that's just specific to our stream. And then I can delete all my previous drawings, so it's all clean, ready to go for this one. And then on the chart, like I said, literally all I have is the 100 EMA. So if you come up here, type EMA, moving average exponential, it'll initially give you a line here. All you got to do is come in here, change the length from like 9, I think is default, to 200, and it'll give you something like this. And again, you can change the color however you want. I think he uses like red and white candles and white lines, so you can change it however you want, but all you need is 100 is what you need for this, not 200. I use the 200 a lot for other strategies, but this is 100 EMA that he uses for this. So that's all we need for our charts. Again, I was kind of playing around with using the volume bars, but since you're trading on 1 minute time frame, I was also thinking like it's probably like pretty fast to see like where the volume ends relative to other candles. So I think that's probably the main reason he goes off the size for those candles. And then for the go-to settings, I just have the start of every New York session to start at 8 a.m. We're going to be trading like 8 a.m. to 3 p.m. New York time for this. And then we can look at the analytics. Maybe we want to fine tune and only trade a smaller window, but that's kind of what I have in my go-to settings. So I'll come in here, go to next New York session. Oh, I'll show you the Heikin Ashi candles as well once I get back to wherever the price is. Okay. So Heikin Ashi candles, I'll show you guys the difference. So up here at the top, kind of right next to the indicators button, that you can select all kinds of different candles. Many of you guys might not even know like a lot of these exist, but you're probably used to seeing these kind of normal candles that basically show you you know, how does price change between when this candle opens versus where it closes, and it kind of shows you the wick highs and wick lows. And contrast to that, the Heikin Ashi candles show you more, they kind of help take out some of the noise. So you can see there's lots of like back and forth, red and green, red and green, red and green, whereas Heikin Ashi candles help kind of give you more of an idea of where price is actually trending. So there's a lot less kind of back and forth. You'll see more like strings of reds and strings of greens as price is trending. That's kind of what he uses for to help out with this. So that's basically what we need to use for this is the Heikin Ashi candles, and you don't need to change anything. Like, don't go into the settings at all for them. Just whatever's default is what you're going to want to use. And we'll kind of dive into the backtesting, see some examples. So coming into this session, March 24th, or the 5th of March, we've got a lower high created below the 100 moving average. So we're looking for shorts at this point. So as I play price forward until price closes back above. So if price closes back on the other side of the moving average, you have to wait for that new market structure to be created. So I will literally just like kind of play things forward a little bit and wait to see until we get a new, so we got a higher low in this case, and now we can look for longs. But well, basically, as soon as price closes on the other side of the EMA, you do nothing until you see that new market structure. Now that we have that, we can look for potential long. We have two flat candles right here, clean pullback candles with no wicks on the top. So let's see if we can get a high volume doji. Perfect. Oh, I need to show you guys one more thing. So in order to see where the actual price is, there's two things you need to do. Number one, come in here to your session settings, and in this spreads and commissions, click enable spreads and commissions, and literally just put this to like a 1. It's going to give you like a 0.25 spread on the NQ. So it's pretty much the same as the current price, and then save that. And then in your account settings, so come up here, go to manage accounts. In the backtesting section, make sure you have this show ask line enabled. And once you do those two things, now that if I go back to my home screen right here, and if I go back into the session, we should be able to see where the actual price is as well. So you can see there's now two price lines on the chart, one where the Heikin Ashi candle is closing and one where the actual 1 minute candle close. And I'll just help you visualize this. This is how the actual like 1 minute candle looked. So you can see where that's why it kind of closed down there. And so going back to our Heikin Ashi candles, how we're going to enter this. Generally, it's going to be better if it closes like kind of at least in the middle of the candle. And again, since this is actually this falls in line with our rule, I wouldn't have taken this anyway. So the other rules section of the strategy PDF, this is a good example to show you guys. So you can take trades where the high volume doji closes against your trade direction as long as price closes above the Heikin Ashi doji body long. So in this case right here, we had a red Heikin Ashi candle. It's not green, like in line with our trade direction. And since the actual price did not close above kind of the body of this doji, this is a trade that we wouldn't take based on that rule. So I didn't have to use discretion. We actually have rules for that. But yeah, you'll see very quickly it would have been a loss on that specific example. However, we have another example right here that we can take. So two additional flat top candles right here, and this Heikin Ashi, this high volume doji is they're basically 0.03% relative to the candle before, pretty much the same size. And just as I've been testing this, like again, this is like the place where there's the most discretion in his model. What I've found is using this price measurement tool, if you measure the high volume doji kind of high to low, is it at least like roughly the same as the previous candles before? I think within like 0.01%, like is kind of what I was using on the NASDAQ. And then we have our other criteria that even though this was a red candle, we had price closing above that you can see kind of from this blue line. So we'll come here, we'll place the order. It's going to be a market order. And I've been using entry trigger 1 when the high volume doji is in line with my trade, and entry trigger 2 when it's against. So since this was a red candle on a long, I'm using entry trigger 2 so I can like filter the analytics later when I see that. So we had an initial loss from this first example, and I do believe from my testing it's not like a huge difference, but if these high volume dojis are against the trade direction, there's definitely going to be a little lower probability on those instead of if this was a green candle. So you can see here we have formed price structure to the downside. Where's my path tool? Form structure to the downside. We got our initial lower high. So after this point, we can look for shorts kind of anywhere. in line with this. And so we need at least 2 clean flat bottom pullback candles at this point. And then we have a high volume doji candle. And again, he uses the term doji recently, or loosely. It's literally just there's wicks on the top and the bottom and a relatively small candle. You'll be able to like kind of train your eye to this over time as you see more examples. And I recommend I'll link his YouTube video as well. That he shows several examples. But we'll do a basically market order at this point, and just targeting a 1-to-1 as if we were using a stop limit kind of at the low of this candle. You place order with a sell market. This is going to be entry trigger number 1 because it's a red candle in line with the short. So it's in line with the trade direction. And had a nice win. Came back pretty close to our stop, but ultimately ended up being a nice win. And it looks like we got like a 1.2R on this one. So again, you're pretty much always going to get a little more than 1R, but he's just going for base hits on this in general. He did say as well that you could also look for bigger, risk toward maybe 2-to-1 instead of 1-to-1, but the win rate's obviously going to go down. So for him specifically, he just sticks with the 1-to-1s. We have our 2 pullback candles followed by the high volume doji. Even though it's green, we have price closing below the body, so we can take this short. So I'll put my position tool here for a 1-to-1, assuming we were doing a sell stop. I'll place the order with a market order. This is again entry trigger 2 because it's a green candle for a short. And this one was a 2-minute trade that went to a really quick win. So again, very quick strategy. It's obviously 1-minute time frame. So I think we'll see the average trade time is quite low on these. We're coming up into some news, so I'm definitely not going to be doing anything right off the bat. Seems like the news was pretty low impact, so we can start looking for trades now. We got our clean pullback candles, but no high volume doji. So it did, work out to the downside, but just didn't meet the entry criteria for his model. So looking for those green clean pullback candles. I'm just kind of following price along. Got one there, one there. We haven't gotten more than 2 in a row yet. There we go. This is another trade. So again, I've been testing 20 trades or something, so I've been able to start seeing these a little quicker, and after you get practice, you'll be able to start seeing them a little quicker too. But we have our 2 clean pullback candles with pretty much no wicks on the bottom. This doji candle right here is 0.04 relative to 0.03. It's actually larger than the previous candles, and it's in line with our trade direction, so even higher probability. So just looking for a 1-to-1, basically placing the entry at the start of this candle, but we'll do a market order. This is entry trigger 1 because it's a red candle for a short. And unfortunately, this one was a loss. So even though I think like when he was testing this in a few videos, he was showing like 60-70% win rate. So it's definitely not like a 80% plus win rate because you're really not going exactly for the 1-to-1s. It's more of like a 1.4, 1.5R on average. But seeing something like a 60% win rate with that average risk reward is definitely still profitable over time. So this is another case where we wouldn't take this trade because even though we had the clean pullback candles, we had what I would consider a high volume doji with kind of wicks on both sides. The actual price is really, really high up here relative to where the kind of body closed. So we wouldn't take this trade because it's pretty much guaranteed to to fail. But this is a good one we can take. So even though this initial high volume doji didn't meet our criteria, we had 3 more kind of clean pullback candles followed by a really nice high volume doji that's much larger than the previous candles. So we can place our position tool here. So using a sell market, this is entry trigger number 1 because we have a red candle for a short. And nice win. So I will say this is definitely going to be probably a futures only trading strategy, at least on this time frame. Like you could potentially test this on like I did some testing last week with ICT's Venom model, which he initially showed on the NASDAQ on like the 3-minute time frame for gold. And if you're going to trade CFD assets, I would say like 3 or 5 minute is probably as low as you want to go because you have to deal with more spreads. For the futures, obviously you can have pretty tight spreads and still catch a win on this, even though it pulled back quite a bit. So I will say like the 1-minute time frame is probably going to be limited to futures only. But if you trade, Forex or Forex or CFD prop firms, you could maybe test it, but I would say probably the 3-minute or 5-minute time frame is like the lowest you want to go. You don't want to mess with the 1-minute time frame on those assets that have quite large, pretty large spreads. So let's see if we can get our 2 or more green pullback candles. There's 1, there's 2. Not really the criteria we need. There's no high volume dojis at all in this. Let's see if we can get one there. So this would be a trade criteria. We have our 2 green, clean pullback candles. We have a high volume doji that's larger than the previous candle, and since it's a green, we had to double check the actual price closed below it, below the body. So you could do a order right here, targeting a 1-to-1. This is entry trigger 2 because it's a green candle for a short, and nice win. Also, like, something to be aware of with this, if you're trading the 1 minute time frame and you're like watching 1 minute candles the whole day, that does take quite a lot of mental energy. So if this were me, I would maybe start backtesting like the entire time that he trades, maybe from 8 to 3 or even 8 to 4 Eastern time, and then maybe try to look for like pockets of time that outperform the others, so I can maybe focus on like a 90-minute window at a time, or maybe a 3-hour window, because yeah, the 1 minute time frame can be pretty mentally exhausting, just watching these 1 minute candles constantly, especially if you don't have, you know, indicators to give you alerts. I'm personally not aware of alerts for these flat top, flat bottom candles. Maybe there are some on TradingView we can look for. But if you have to watch all of these 1 minute candles for like 7 hours a day, you're gonna go crazy. So I think that's like one of the great things about backtesting is, yes, you can test like the whole session, but maybe try to fine tune after you get some data, you know, what are the best hours of the day to trade, so you don't have to do the whole thing. I did the same exact thing with my first 15-minute pattern strategy. I think I tested it on the entire New York session, and then I found that like I could get, I think it was something like 80% of the profits if I just traded the first 3 hours. So that's ultimately like what I decided to do after I tested that strategy. The data really helps kind of give you that information. So this one does meet our criteria. We have 2 clean pullback candles, a high volume doji that's bigger than the previous candles, and price closed below the body low. So we can look for a 1-to-1 right here. Place order, sell market, and this is entry trigger 2. And yeah, literally 1 minute trade to your TP. So that would have been super easy. So playing price forward, looking for red clean pullback candles followed by a high volume doji. We measured this one relative to the previous candles. So 0.04%, 0.04%. So pretty much the same size as the previous candles. So we can just target a simple 1-to-1 as if we were using a buy stop above this candle. So this will be entry trigger 1 because it's a green candle close for a long. And unfortunately had a loss. This is probably a good period to see what some like kind of choppier periods look like because he was seeing like a 70% win rate in I think March of 2025, and so about 1 year previous. Kind of see what the results look like for that. We're pretty much flat over the last couple of days, which honestly is not bad. To be flat when a strategy is not performing great is honestly pretty good. So we did have our pullback candles and a doji, but it's quite a bit smaller than the previous candles, so we won't take this one. Let's see if we can get a higher volume doji. This one's probably pretty close. Let me see. 0.05% relative to 0.05, so this would be valid. Even though it's a red candle, the price did close above this doji close, so this could be entry trigger 2, where the candle's closing against our trade direction. But buy markets, entry trigger 2 in this case. Let's see what we get. Unfortunately, a couple losses. So we had a couple losses in a row, and we'll continue to see what we get over a larger sample size. See if we can find another one. So we got our clean pullback candles. We have a doji, but it looks relatively small. Let me just measure it real quick. 0.05 versus 0.06. This is probably close enough. Again, if it's like within 0.01%, I was like considering that close enough for most of these, and I think like the previous candles were actually a little smaller too, 0.05. So it's relatively similar size to the previous candles and also very close, but price closed pretty much at the top of this body, so I think we would have a valid setup right here. So we can come in here, targeting a 1-to-1, place the order. This is going to be entry trigger 2 because it was a red candle for a long, and unfortunately had a loss. So we're definitely losing a bit today. But when I tested this in, I think part of 2025, it was rather profitable. This just might be a bad week or bad month for the strategy, which you're going to have with pretty much any model. Let me make sure I didn't miss a trade right here. I didn't see where it closed. 0.06 to, yeah, Let me just see where this previous candle closed. All right, yeah, so this would have been a valid trade. We have the 2 clean pullback candles followed by a high volume doji right here. So as we come into this, we can do a market order right here with entry trigger 2 because it was a red candle and we're taking a long and had a nice win. If you were to play around with a trailing stop loss, Heikin Ashi candles are kind of unique in the sense that they continue to stay one color while the trend is continuing. So one thing you could potentially do is if like there was a higher low, like pretty much right near your take profit and price is likely to kind of continue higher or could potentially continue higher, one potential trailing stop you could use is just continue to hold until there's a candle of the opposing color. So you kind of continue to hold while the trend is continuing and then kind of close. So you wouldn't have gotten a ton more, but potentially another like 0.3R or something based on this if you use that similar kind of trailing stop loss. But for the initial model, I just recommend using like the 1-to-1s for sure. So we had our 2 clean pullbacks and then we had a red doji right here. I think this one was a loss, but I'm going to record it so we have it. So we had 2 clean pullback candles and then a high volume doji right here. And price closed well above the body, so we could target a 1-to-1 right here. Again, I was pretty sure this one was a loss, but this would be entry trigger 2. And yeah, would have been a loss. Went up a little bit, but then came back on us. So had 2 clean pullback candles and then a small doji. So even though this one did play out, it wouldn't have met our criteria. It's happening a lot. I think that's honestly probably a large reason why this the purity we're testing is performing like how many times have I said like doesn't meet our criteria even though it would have played out. I think there's a lot of examples in this that maybe on average you'll catch more of those trades with the model, but just from the kind of period we've seen, there's a lot of examples that don't 100% meet his entry criteria right here. Like this specific candle is 0.03. Actually, this one I should have recorded this one. This is actually if price closed above the body, that's actually one I should have recorded. So let me just verify where price closed. Yeah, so this is actually a good trade I should have recorded. So we have 2 clean pullback candles. We have a nice doji right here. It looked quite a bit smaller than the previous candles, but when I measured it, it was within that 0.01%. So I think this would be one that we could take, just targeting a simple 1-to-1 here. And this would be entry trigger 2 because it's a red candle. And yeah, would have been a nice win. So a couple hours left in this session. We have 2 clean pullback candles, but this one's definitely too small. So 0.05% relative to like 0.08 and 0.08%. Yeah, this doji is much smaller than the previous candles, so does not meet our criteria for the high volume, even though it is. It would have worked out. And again, this is something that as we continue to see more examples from his videos, maybe this is one he would have counted, particularly because it closed in the direction of the trend. Like it may be worth taking these smaller doji candles as long as they close in line with the trade direction. That could also be something you could potentially test, but he specifically said like I don't want to trade small dojis relative to like the previous candles. So kind of from what he shared in his videos, I don't think this would have met the criteria. However, this one does look much better. So we have our 2 clean pullback candles, high volume doji that does look about the same size or larger than the previous candles, pretty much the same size, and it's in line with the trade direction. So we can come in here, target a 1-to-1 right here, and this is entry trigger 1. See if we can catch a win with this. Nice win. Took a little while, but did end up going to our take profit. Basically took out this drop here. So we're back in profits. We did have a little period drawdown there, but we're now back up about 1 hour. So hopefully this has been like a good realistic example how even if a trading model is profitable, it's going to have periods of drawdown. And if we happen to start backtesting during a period of drawdown, we're going to see that. But the whole point is that over time, hopefully it gives you more wins than losses, and the wins are bigger than the losses to get you out of that drawdown. I showed you guys basically 3 full days of testing this. Obviously, we're flat in this example, so this equity curve is going to be pretty flat. We only had a 45% win rate in this subset. We did get up about 2R at one point, and then we went down about 2. So we had about a 4R period of drawdown in this section right here, and ultimately ended up coming about flat. But this is a pretty small sample size, only 20 trades. I want to show you guys what it might look like with a little bit larger sample size if we incorporate kind of the testing I did before in line with this section we did here. So when I tested this before, I was getting more of like a 60% win rate with like 40 trade sample size. So it was in 2025, which, you know, not surprised. We have seen a bit higher volume in 2025. So maybe this strategy is doing a little bit better relative to last year. But since we have a little bit more data, I am actually pretty curious to see. Let me change this to UTC -4 to line up with New York. I'm really curious to see what the breakdown is by day and by hour. So, yeah, there was actually a killer win streak when I was testing this previously. But yeah, we did have 4 losses in a row. Average duration was 6 minutes for this strategy. So if you're someone that does not like sitting in trades for a very long time, this could be a really good one for you because these trades are super short. On average, looks like we got 1.35 R from the trades. So let's look at this performance by time. So I want to see the win rate. That's the thing I'm most interested in right off the bat. So you can see kind of as I expected overall, there's quite a bit of drop off both during like the kind of going into lunch on Eastern time. So maybe the 11 o'clock hour is just not good for this strategy. And also the morning in general is better than later in the day. So it does seem like the kind of 8 to 11 window, it's basically 8 a.m. Eastern until 11 a.m. Eastern, might be like the best period to trade this if you don't want to trade the whole session. If you want to potentially add a little bit, it does seem like, you know, the 1 to 2 p.m. Also had a pretty good win rate, and I think the noon to 1 as well. But yeah, it does seem like there's a little bit of lull, which oftentimes like people go to lunch and there's just a little less volume kind of during the lunch hour. So not surprising that we saw a little bit of dip there. But then let's look at the days as well. This is something you probably will only be able to like really identify after you have a larger sample size, but there might be certain days of the week that just tend to be underperforming for the strategy. And like if you saw this data, for example, over, you know, 50, 100, 200 trade sample size, you might be able to see like, man, Wednesdays aren't very good. Maybe if I just take out Wednesdays, that'll help my win rate. I don't have to trade that day, you know, can kind of rest and relax that day. But also like if there's certain days that are crushing, could be an opportunity. I want to make sure I'm trading that day, or maybe even consider going a little higher risk per trade on those days. So tons of information you can do with the analytics. Again, I did some testing with this earlier, and I got like almost 20% in the same month in 2025. So I think this is going to be a good one to kind of test over larger sample sizes to see like what the relative changes. Again, I think this is hopefully a realistic example to show you guys that, you know, any strategy, even if it's profitable, I mean, he's been doing this for a while and has had quite a bit of success with it. Even if profitable strategy, that someone that is working well, sorry, I got these trading view alerts going off. Oh my gosh. Even if a strategy is working like over the long term, you are going to have periods of drawdown, and the backtesting to get the data is going to help you kind of know what to expect like during those periods of drawdown, but also give you some good information on, okay, maybe if I filter out some of the underperforming hours or days, then I think that could improve my results quite a bit. And so I really encourage you to get the data on that. And yeah, if you guys start playing around with this and you have some examples, you're like, hey, like, would this be a valid trade based on the kind of trade criteria? Like, feel free to share it in the Discord chat and we can like take a look at some more examples together. But and yeah, I'll also be sharing his YouTube videos that have go over several examples as well, so you can kind of look through a lot of repetitions with this, because it is a pretty high frequency trading strategy. You know, you're trading the 1 minute time frame, multiple hours a day. You're going to get quite a lot of trades, but you also want to make sure that you're backtesting them pretty consistently to make sure that you're only taking the trades. Last thing I want to show you guys is just the difference between two tags. So I showed you entry trigger 1 was what I did when the candle closed in line with the trade direction. So overall we had a 55% win rate. And in this sample size, again, not the hugest sample size, it pretty much did make a difference. Like, we had almost the exact same win rate if we had the candle closing with our trade direction versus without. like pretty much exactly the same win rate. So that's definitely, I think, a trigger you could potentially use. Maybe again over larger sample size if you see a big deviation. Maybe those aren't, but I think as long as you use this rule here to make sure like the actual price is closing, higher than the body for longs and lower for shorts, it probably will still give you like at least a reasonable win rate with that. But yeah, I'll be in the Discord if you guys have any further questions. But I thought this was a pretty unique strategy to test out. I blame Trey for giving us March 2024 to test. No, definitely no harm. I'm glad we saw a period of drawdown, so it's actually like a realistic example what you would see during that actual period. But hopefully as you test this over a longer time, you'll see more of a steadily increasing equity curve, looking a little more similar to what I saw when I was testing this during a period in 2025 where we did have periods of pullbacks, but overall had a pretty nicely increasing equity curve. But yeah, hope you guys enjoyed learning about it, and I'll catch you guys later. Hope you have a great week. See you guys.